Good morning. Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me live at MarketSite is Rosenzweig. He is the president and director of investments over at RZ Wealth. We also have Marc Premselaar, is managing director and head of capital markets over at CAIS Group. Thank you very much for joining us at MarketSite today. And let's talk about non-traditional investing, keeping it simple but different. Irv, we're going to kick it off with you. Why do you feel that offering non-traditional investments is a good idea right now in this market?
Volatility. I mean, we're not sure what's going to be happening with the trade war, if you want to call it that. At least there's tariffs out there. So wherever that leads, in addition to that, you've got interest volatility. So I think you've got to be creative. I think to just keep walking the path in a traditional sense is possibly the road to trouble. I've been doing this long enough that I know that.
So diversification's key.
Exactly.
Right now.
Yeah.
All right. So what specifically about structured notes and CDs? Haven't heard about CDs in a while. May be compelling to investors.
Well, again, these are in a way complex, but in a way simple to understand types of investments. I mean, in the case of the structured CDs, you do have FDIC protection. So you look at the issuer that you feel comfortable with. You look at maybe what the underlying index is associated with that issuer. At the end of the day, it's FDIC insured. So that to me gives me peace of mind on behalf of the clients. In addition to that, aside from trying to navigate the pitfalls of volatility, it may also serve as market entry for some people that are just on the sidelines. To me, if somebody's sitting in a money market, and the bogey should be the cost of living. If you're not doing the cost of living on an after-tax basis, you're going backwards.
Right.
You don't feel it because it's like an erosive effect. It takes years or whatever, but you are going backwards. And I've seen it long enough that you want to at least try to find a way to navigate the markets and make the client feel comfortable with what they're doing.
All right, so Mark, what are some considerations such as point-to-point? What does that mean?
So point-to-point, you really are not path-dependent. You are concerned about where the level of the index or whatever the underlying is, equity, albeit, where you start and where you finish. And that's all that you're considered about. So you care about the entry level of the index and you care about where the note closes off. So those are some considerations. Also, there's credit risk as well. So you want to be sure that you have a diverse list of issuers on the platform. At CAIS, we have an open architecture platform, so you get the credit diversification. And then as well as liquidity, right? Structured notes are designed to be held to maturity. And while there is liquidity, there may be liquidity throughout the life of the note, they're designed to be held to maturity. So investors who invest in these notes should be prepared to hold them.
So would you give us a sense of these structured products and why they might be of interest to investors? When you talk about the underlying index, what would one of those indexes be?
Sure, and that's the beauty of structured notes. They generally can be linked to any liquid underlying index. We've seen the biggest interest for underlying indices come via the equity markets. So think S&P 500, Russell 2000, the EFA, the Euro Stoxx 50, because this enables folks who are concerned with where we are in the market, volatility, the need for downside protection to get simple beta exposure with some downside protection or enhanced upside participation as well.
So specifically, how would you use these in an investor portfolio?
To some degree, depending on what the issue is, we'll use them as a fixed income alternative. So, I mean, again, you're kind of challenged to find that interest rate to beat that bogey that I just laid out there as far as, the cost of living. In addition to that, it may be a way to get market entry. So it may be a way for emerging markets exposure, through one of these buffered return equity notes in that regard. So we use it in a couple different ways, some of which are very creative and for market exposure, and some of which are really as a fixed income proxy, particularly with the CDs, because again, all you're really risking is the opportunity risk. You have no downside related to the CD as long as you're within the level of protection. But aside from that, all you are risking is the opportunity if the point-to-point does not really cooperate during the time frame.
All right, so Mark, tell us about CAIS Group and its growth in the independent wealth management platform.
Sure. So CAIS Group is the premier alternative investment platform dedicated to the independent wealth management space. And we've really been at the forefront of the industry shift to independence. When you think about the U.S. wealth management channel, there's roughly $20 trillion in assets, and almost half of that now is independent. And when we say independent, we really mean the registered investment advisory space, or the RIA community, and that's who we're really dedicated to help serve, provide tools and access to help compete with the larger banks, wirehouses, or traditional wealth management platforms.
What are some of the alternatives that are available through the CAIS platform, and how do you vet them?
Sure. So we really have the whole gamut of alternatives. We have traditional ones like private equity funds, hedge funds, real estate funds, to newly considered ones like structured notes or 40 Act funds, also on our platform. And all the funds that come onto our platform must be vetted through our independent research partner, Mercer Consulting. They are one of the largest investment consultants in the world, and every fund that comes on our platform not only must be vetted by them initially, but also on an ongoing monthly basis as well.
So do you help advisors convey some ideas and products that are available from CAIS to their clients? Do you work with the advisors hand in hand?
Sure. So, on the CAIS platform, we really have a number of ways by which advisors see ideas for funds, research, etc. One's through our portal. We provide educational material, Mercer reports for the funds, as well as white papers. And then we also have product specialists throughout our 5 regions. And to support the product specialists as well, we also have operational and client service support too, to really support the entire sales cycle. We also do have the fund managers on our platform and our business partners. They're encouraged to travel, be in the field with our clients, whether it's a call or a manager meeting or a private event. We fully support and encourage all of our business partners, the product providers, to be in the field speaking with advisors like Irv.
That's what I was going to say, Irv, I would imagine you leverage a lot of what's on the platform.
I do, for sure. I mean, again, the material is very good. I mean, so when they lay out the offering, there's a lot of information there, but there's still some nuances or maybe some questions that come to you, and CAIS is very supportive of all that for the RIA channel.
All right. Well, thank you both for joining me at MarketSite today, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.